first topic today is we're going deeper into the different activities that, let's say, people in crypto DeFi are performing, and to see how those are taxed. I think it's a very important part of the future of DeFi. Like it's figuring out how things are taxed. I think also the IRS doesn't know yet, and there's going to be a lot of legal precedents set, and once those precedents are set, eventually the IRS will collect those and pretty much issue rules. So that's what has happened before when new things have popped up. And then once that gets codified into the rules, then people think things will stabilize way more. It'll be more certainty. But right now we're in the midst of it, which is to follow the different types of lawsuits are brought up. Either the IRS will come down and against someone or some entity, or a person will file for a refund or for something, and they'll try to get money back because they think the law is applied a different way.
2020 in the summertime, I did not participate in this. I don't know that much about it, but 2020 in the summer was known in the crypto world as DeFi summer. I think it's when there was an explosion of users and innovation in the decentralized finance ecosystem. It's only gone up from there. I don't know what season we're in now, but I can imagine that on the whole, the tax return season of 2020 and then again in 2021, it's going to be a really interesting time. I bet if you reach out to a CPA in your area and ask them if they're getting questions about DeFi, staking, all these protocols, how it works, I bet there's some CPAs out there Googling for answers, which is, how the modern world works. But that's just my guess, is that we know that there's a lot of people with a lot of uncertainty because the IRS just hasn't guided on a bunch of the stuff happening in there. So
essentially what we're talking about today is a lawsuit brought up by the Jarrett. So it's essentially Jarrett et al. Versus United States of America. And essentially they're filing a claim for a refund based on, and you can correct me if I'm wrong here, because I've just, 10 minutes ago, I got the claim, and I was looking at the IRS response as well. But essentially they're trying to get money back from, was it tokens they received from staking, something else. The IRS is saying that that's income. And the Jaretts are saying that this isn't income until it's sold.
It appears that Jarrett or someone in the Jarrett family staked Tezos, which is a layer 1 blockchain that advertises on F1. If anyone watches F1, you'll see Tezos out there. But they did a staking function, meaning they put in their coins to the protocol to help them stake and help secure the network or whatever, however proof of stake works on Tezos. No idea how that works. But the end result of this is that you get rewarded in more Tezos tokens. And what their attorneys are trying to argue and what they're suing the IRS about is whether or not receiving those tokens as a function of staking counts as income or not. Mr. Jarrett says no. Mr. IRS says yes, absolutely it is. And there's some interesting details in there as well.
We're talking about $9,407 of other income in a Schedule C. And so what they did was, and this is my understanding, is they paid the tax and then they claimed a refund. And the reason why you do this is because if the IRS comes down and says, or if this lawsuit comes down in favor of the IRS, you don't owe them anything. But if it comes down to you, then you get the money back. But if you didn't pay it, then there's like penalties and interest and all this other stuff. It's not worth it. So for that amount of money, you're getting clarity, and in case things go wrong, you're hedged.
So you're saying by declaring it in the first place, you're sort of hedging the outcomes.
Yes.
Rather than just not declaring it and saying, "Oh, I didn't have any of this income."
The way you do it is you file a 1040, you put down 9,407 as other income, and then you file an amended return seeking a refund for all the taxes paid, but you back out the 9,406 of previously reported income. And because you didn't receive a response from the IRS, obviously, because the IRS doesn't, won't respond to that, then you file a lawsuit. So you can actually go ahead and not pay, but if you're wrong, then, penalties will come in. And so this is the actual, the good way. If you're actually right, the IRS will owe you interest.
Interesting. Okay.
So, yeah, interest in a very small amount. But the very interesting part about this complaint is that, and they use a specific example that I actually really found interesting. Jarrett and the United States, they basically claim different things. They claim one thing, the IRS responds. The Jarretts have attempted to compare the actions of creating these tokens similar to those of a baker and a writer, right? Similar to like a baker who bakes a cake with ingredients in an oven. Just creating the cake isn't income. You have to go out and sell it, right? That's the issue of income. And a writer who writes a book on Microsoft Word on his computer, like when the book is finished, and let's say you actually send it to the publisher agrees to sell it, but you haven't received the money yet. Is it income? No, it's income when you sell it. And so what they say is that just the act of creating these tokens isn't income. It's when you sell it is income. There's another claim that they do, which I found very interesting. It is that, I think it's line 30 of the claim says, virtual currency is property for purposes of U.S. federal tax law. And I don't remember do you remember when the IRS said that, coins or cryptos are property?
2014, I think.
Yeah. The IRS response to that claim number 30, paragraph 30 states a legal conclusion. To the extent a response is required, the United States denies that virtual currency is in all instances properties for a purpose of U.S. tax law. So basically they're saying, in this instance, it's not property. So they're trying to carve out, I would say, an instance where this is not property. It's pretty interesting that the IRS says, coins are property, and then here they say no. For in this case, because it's not property.
Both sides have interesting things. I think the metaphor about the cake and the book are a bit of a stretch. So somewhere else in the same complaint, they said, the United States here seeks to use federal income tax law to do something unprecedented, which is tax creative activity rather than income. The idea that staking your Tezos is creative activity akin to a baker coming up with a creative loaf of bread. You got to admit that's kind of funny.
That's the stretch.
Yeah.
But the truth is that I don't know. Is there an ascertainable value that you can put on to the Tezos tokens when you get them?
Yes.
I think there is, right?
Yes.
So, whether you sell it or not, I don't know. I have mixed feelings about this. As a tax person, I want to get accurate results, but still, I'm not sure if there's any more examples that are more. Because the book, you don't know what the value is until you actually go out and sell it. The cake, you can put a value to it, but you don't know if you're going to sell it or not. And then it says those tokens, there's a market for it. There's a market and ascertainable value. You can sell it at that price at that day. So I don't know.
There is a section of the code, and I only know this from researching things about equity comp, but there's a section of the code that deals specifically with the taxation of property that goes in exchange for services. Section 83. If you've ever seen Section 83B election, which people do for private stock or incentive stock options in certain cases.
It's a fair market value. You will issue a 409A valuation, right?
There you go. So Section 83, broader than just the B election, is all about the exchange of services and taxation of services that are not, when you're not getting paid in money, you're getting paid in property or something else. So there's fertile ground here for both sides to dig in and look for examples. My big takeaway here is that taxes, for most people who are just dealing with them on hey, TurboTax or tax return, I did this, here's the outcome, yada, yada. the amount of shades of gray in the tax code cannot be overstated. Like it's so gray, and this crypto arena, DeFi, is only making it grayer. So you're probably going to see a lot of action, a lot of stuff happening on this. There's some things we do know. There's stuff that we thought we knew 7 years ago in 2014 that's being, maybe thrown up in the air, right? We may have to start from scratch. But really interesting to see these worlds collide, where some people are trying to build a new financial system. Meanwhile, the tax man is trying to catch up and say, this is, this is this or this is that.
How is virtual currency treated for federal income tax purposes? Virtual currency is treated as property, and general tax principles applicable to property transaction apply to this.
2014-21, not 79. Okay,
yeah.
I made up 79.
To the extent that the response is required, the United States denies that virtual currencies in all instances property.
Not in all instances, right?
Yeah.
Avoiding that kind of blanket treatment.
You have two conflicting statements, right? So it'll be interesting to see who is right. That's going to be a fun argument there to listen to.
I think it's going to get worse before it gets better. Like it's going to get murkier before it gets clearer. Things like DAOs, decentralized autonomous organizations, how they distribute capital, how taxation of a DAO, like is it going to default to a partnership? What's going to happen with that? Like there's some crazy stuff going on. A lot of these are global organizations, and the US has extremely onerous tax implications for owning controlled foreign corporations and all this overseas stuff. So it's going to get crazy. That's my 2022 prediction. Crazy tax laws, and someone is definitely, they probably already have, but someone's definitely going to prison in like a public way for tax evasion in the US. I predict next year based on stuff that happened in 2020 or 2021.
There's a lot of people I've heard who are like, I'm not reporting this. I'm not, mistake, Yeah.
Took down Al Capone, it'll take you down too.
Yeah. Yes. So that's the end of the conclusion. Pay your taxes, report, talk to experts in the field.